Hi, this is Randy Finney with Right Side of the Chart, and today is Tuesday, August 29th, 2017. It's a little before 1 o'clock Eastern Time, and I just want to do a very quick update on the broad markets. There's not a whole lot of interesting developments worth noting, at least, not yet. Here's the story on QQQ. This is the 60-minute chart I've been sharing for the last couple weeks here. Same story, we had the confirmed divergent low, the pop into the second resistance zone that I was targeting out of three for that bounce, R1, R2, R3, failed at R2, resistance level 2, came back down. And as you know, in the last update, this is what I mentioned here. We're really sandwiched between these yellow lines. This is a trading range. We need to clear that. Now, we did have a pop out of that range today. Let's zoom in on that. And this is interesting. At the time we reversed, after that I added these support levels and mentioned that each one is significant. If that level breaks, then you look for the next one to go, and finally if S3 breaks, then we're probably going much lower. Um, here's what happened today. It was sort of interesting. We had a gap down. The market's gap down and had a strong recovery. You can see the Qs have now turned positive, up of almost 0.3% after a pretty large, relative to the recent range, pretty large gap down. Interestingly enough, my S2 level was at 141.20, and you can see where the markets opened in the pop-up box to the left. They opened at 141.19. All right, so a penny below there, close enough for government work. It shows these support levels are definitely important to watch, and that's a level that Q's gap down there, and they bought up the gap. They had a little stop clearing run right after the open. You can see the candlestick tail there, that shadow down below. It just come through the stops. Anybody trading, with technical analysis, looking at that gap, saying, okay, if that gap gets backfilled, we shouldn't go below, and they might have had their stops just below. So either way, that's what that appears to be. Doesn't matter. Since then we've reversed, and it's really, the reversal, as impressive as it is, doesn't really change anything in the technicals. That's just a what I call the typical reaction off the initial tag of a support level from above. It's a reaction, pretty strong bounce. Again, relative to the scope and the move in the last few days, everything's relative. When the volatility expands, then this would be considered a small bounce. Right now, after that pop in volatility we had recently, everything's calmed down. VIX has fallen back down, and there's a story. So we're back in the zone. We still need a definitive break, and as I often talk about, 60-minute candlestick close either above this R2 level, 143.23, and again, that would be the R3 if that's taken out with conviction, especially 60-minute close. That will most likely open the door for a move to new highs. Whereas we need now a break and a close below S2. We haven't had that yet. Even a break and a close below S1 will help. So we need that as well. And let's see what happens. And then of course S3, that's the final what I call nail in the coffin. Doesn't mean the market has to implode, but it just I think the odds are pretty good that if that level goes, then we're looking for a considerably deeper correction in QQQ. Bigger picture, if you just take a step back and look at the trend since July, late July, is lower. Prices have been moving lower so far. Um, so again, nothing much to report until and unless those levels are taken out. Let's look at SPY real quick. There's the S&P 500. You can see the trend lines. This is just a potential downtrend line. There's only two reactions, so I don't really give it. It needs to have a third reaction to be validated. But you can also note that this horizontal line. This is the only line I have on the board. The only horizontal line on this, at least on this board here. 245.50, we'll call that, maybe a little above. There's a couple reactions. You can see a big gap right there, reactions there. There's a gap around there, some reactions, and you have that potential downtrend line. So that is certainly a formidable resistance zone. Let's see if the SPY gets there, what happens. My expectation would be, at least if it tags that level, at least a pullback, even if it's going to break through. And if not, if we do get to that level in reverse, you want to see these previous lows get taken out. That's always, when you're trying to chop around, this is just a grind right now. Again, don't read too much into this. Don't read too much into if that today's low is taken out. But if we get these lows here from the other day, a couple weeks ago, taken out, um, that would also, especially if it happens when QQQ breaks that third support level, that would be something worth noting. Quick look at the daily charts. Remember, more importantly, the charts are stacked. We have the SPY and also, didn't just randomly bounce today on that 60-minute chart. It bounced off this trend line. This is the trend line, the trend line that goes all the way back to the beginning of 2016, early 2016. So this is a very important trend line. That's important support. So the SPY hit that, and we had a reaction off that trend line. It's also now underneath this minor uptrend line, this yellow uptrend line here. So again, that's why I think if we take out those recent lows, it's going to take this line out on the SPY. We do have a very significant support level at 240.32. That would be the next level to watch if this trend line goes. And on a daily chart, you want to see it happen on a daily time frame. But there's everything that I've been pointing out. They're still there, very much intact. The negative divergences. You can see the PPO now looking like it's headed lower. The white line, that's what I'm watching. The 9 EMA. It's crossed below zero, but only by a hair. And the PPO line was turning up. It's really flattening out. So you can say it's turning up, but again, it's at an important juncture. Sometimes it looks like you're going to get a cross and then the line moves back down. So just watch. This is something else. And again, that's a trend indicator, but price comes first and foremost. So watch those two levels. And then jumping over to really, what I've been watching for a sell signal on the Qs, which are the leading index holding this market up and lifting the market really throughout the entire bull market, are these semiconductor stocks. And they continue to pinch. Look at this price compression. After having these huge rips and these powerful runs, we've been in a very tight, unusually tight sideways range, especially for the semis. And we're compressing. This is that symmetrical triangle I've been talking about. The bottom of that triangle is defined by that primary uptrend line, again off the early 2016 lows. We're dancing right on it. This has to break one way or another. Now, it doesn't have to explode if it breaks to the upside or breaks to the downside, but as we're approaching the apex, ultimately or eventually prices are going to move out of here within just a few days, week or so. Um, so I'm still looking for a downside resolution of that pattern, but it hasn't happened yet. And you can look at all the other semiconductor ETFs; they're going to look very similar. So again, watch the semis; it'll give you clues on where tech is heading. They're most likely going to move together, but again, this might give us a heads up if we see these semi ETFs breaking down first. There's XSD, the Spiders S&P Semiconductor ETF, dancing the line, holding the line, just like SOXX was we just looked at. And there's a key horizontal support level at 60.53. If you want to set a price alert for a break under 60.50, that'll probably, if that alert goes off, I think it's time to get short the semis if you're not already short. SMH, there's the other one. Same triangle pattern you can see there. And there's a little support below there. You have a little ways to go down on SMH. But again, you see all three of these make solid and impulsive breaks down below these uptrend lines off the early 2016 lows. That means the semis have rolled over and most likely the tech sector, and hence QQQ will follow. And of course, the rest of the market. All right, this has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.